Ladies and gentlemen, good day and welcome to BCL Industries Q3 FY24 conference call hosted by InCred Equities. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Awasthi from InCred Equities. Thank you, and over to you, sir.
Thank you, Ria. We thank the management of BCL Industries for giving us the opportunity to host their call today. From the management, we have Mr. Kushal Mittal, the Joint MD of the company, and along with them, we also have their IR team, Go India Advisors, represented by Priya Sen on the call. With that, I'll hand it over to Kushalji. Over to you, Kushalji.
Thank you, Mr. Nitin Awasthi. Good afternoon, everyone. I extend a warm welcome to all participants joining the Q3 and 9-monthly FY24 earnings call conference. Our investor presentation and results have been made available on the exchange, and I trust you've had the chance to review them. I extend my gratitude to our host, InCred Equities, for facilitating today's call. At the outset, I want to highlight that all figures discussed in the presentation and my commentary are on a consolidated basis, including contributions from Suksha Distillery, which is a 200 KLPD plant in Kharagpur, Bengal, where BCL holds a 75% stake. Before we discuss financials, I would like to discuss the strategic and industry updates. The company's performance in the edible oil sector remains stable for the quarter, attributed to its diligent monitoring of the international market and its conservative approach within the sector to mitigate potential losses from global volatility. The recent government initiative to offer an incentive of ₹179 per litre for maize-based ethanol is a testament to India's commitment of energy self-sufficiency. This move is timely, aligning our expertise in grain processing and our efforts to strengthen our ENA and ethanol business. The company is now solely relying on maize for all of its ethanol production. This quarter, it faced a slight dip in margins due to rising raw material costs. However, we anticipate the margins improvement in the coming quarters with the adjustment of the maize ethanol prices coming in January of 2004 and the forthcoming maize harvest in Bihar, which is set to be a very bumper crop. Additionally, BCL has applied for clearances to establish a 100 KLPD biodiesel plant at its Bachinda unit. This plant will utilize maize oil extracted during ethanol production from maize, facilitating both forward and backward integration in our current ethanol process. This move aims to streamline process, boost efficiency, and further add value to the company's maize ethanol manufacturing. The recent launch of a power plant utilizing paddy straw at Bachinda unit is expected to yield significant cost savings on power and steam, further bolstering the operational efficiency of the company. Expansion initiatives for 100 KLPD ethanol-only facility at Suksha Distillery are progressing smoothly, with all necessary clearances assured and most of the work being done on site. Additionally, we are actively working towards increasing our distillery capacity to 850 KLPD from the current 600 KLPD. Furthermore, the company is experiencing a surge in demand for its country liquor brands in Punjab, projecting sales to exceed 1 million cases in the current financial year, which is more than double year on year. In the real estate segment, no sales were recorded in the quarter. That said, further revenues from real estate assets will be directed towards debt repayment. BCL is focused significantly on reducing debt and managing it under the interest subvention scheme to maintain a robust balance sheet and creating enhanced value for our shareholders. I'm delighted to announce impressive results across all key financial parameters for Q3 and 9 months. During the 9 months FY24, a total revenue of 15,093 crores, reflecting a 16% increase year-on-year. EBITDA for the period stood at 147 crores, up a staggering 79% year-on-year. During the 9 months FY24, the company reported a net profit of 72 crores, marking an 80% year-on-year increase. PAT margins grew by 162 basis points, reaching 4.5%. In 9 months, FY24, the ENA in the distillery segment grew by 44%, reaching a revenue of 197 crores, while revenue from ethanol grew 3 times to 575 crores. This upswing can be primarily attributed to the new commissioned capacities of the company and the past increases in the maize ethanol prices that were given from the government. During 9 months FY24, BCL approximately sold over 9.5 lakhs boxes of Indian-made Indian liquor. Volume of ENA increased 35% year-on-year to 30,578 KL, while ethanol volumes were at 90,895 KL. In the third quarter for the financial year, the revenue stood at 646 crores, up 20.6% year-on-year. EBITDA for the quarter was 57 crores, marking a 35% year-on-year with a strong EBITDA margin of 9%. The company reported a net profit of 33 crores with a PAT margin of 5.1%. For Q3 FY24, revenue from the ENA in the distillery segment grew by 43%, reaching 68 crores, whereas the revenue from ethanol was 254 crores. Given the strong government support and our rich expertise, we maintain a strong outlook for the company, and we expect our margins to improve going forward with the increase in maize ethanol price coming into effect, and also with the new crop coming in Bihar, which is an estimate that it will be a 55 lakh metric ton crop. Now, I would like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Dhruv Mukesh Bajaj from SmartSync Investment Advisory Services. Please go ahead.
So firstly, congratulations on a decent set of result. I wanted to know that whether the benefits of higher grain-based ethanol tender price that the government has hiked to 71 rupees will flow in the coming quarters, or the rise in maize prices have already factored in that effect, and that therefore margins expansion is not likely.
No, the increase in the price for ethanol to 71 rupees 82 paisa will be reflected in the Q4 numbers, not in the Q3.
Okay, sir. Okay. And sir, I'm really pleased to see that company has applied for permits to establish a 100 KLPD biodiesel plant. So can you please give us an overview about this opportunity in terms of A, how complex is the production and the raw material procurement process? Who will be the target clientele for this? The margin profile of this business versus ethanol, and the potential capex and funding mix that we are planning.
See, so thank you for asking this question. Just to give you an overview, similar to a 20% blending mandate in ethanol, there is a 5% blending mandate for biodiesel in diesel in our country. As of today, the recent reports, the blending percentage is at 0.1% in the country. Buyers are the same OMCs, HPCL, IOCL, and BPCL with Reliance as well. The current prices for biodiesel are at 82 rupees a litre, and this is also done through a tender system just like ethanol, and since capacity is nowhere close to demand, so we expect all tendered quantity to be allotted, and the price of 82 rupees is quite good. Again, talking about the raw material, as I mentioned, about 40% of our total raw material requirement for this 100 KLPD unit will be derived from the maize oil that is being extracted in our current system. I would like to here again mention that I believe we are the only company that we know of that is currently extracting maize oil while producing ethanol. So that raw material is, the value for that raw material is significantly. The biodiesel process is being done in many Southeast Asian countries, and with our long experience in the refinery business, we're very confident that we'll be able to, succeed in this industry without any major issues, as we already know the major refinery suppliers in the country, and we've already had very long technical discussions with them regarding the process. The 40% of the raw material is available to us. The rest would be bought from the market, which would be in terms of fatty acids and meaty oil. We believe that enough is available in areas around Bathinda, so that will help us run the unit. And talking about the margins, we expect the margins to be higher than the distillery business, mainly because 40% of the raw material is available to us without any added cost.
Okay, sir. Okay, so have you thought about the potential capex, the timelines for the capex and the funding mix, or that is too early to ask, sir?
So the project cost would be around 160 crores, of which the company has already applied for a loan of close to 90 crores to our current bankers, PNB and Canada Bank. And we hope, to move forward quickly on that front as well, because we have a good relationship with our bankers. And similarly, we have applied for all the environmental clearance that are required to set up this unit, and we hope to move fast on that front as well. So we're hoping all the clearances and the financing closure to be done in a quarter's time, in 3 months' time from today.
Got it, sir. That is very helpful, sir. And sir, I had a fundamental question. Like, since we are seeing influx of so many players in the ethanol space, even in grain-based ethanol space in the recent times, and the government's guidance of 20% will be met in the coming 1 to 2 years. So what will be the growth drivers in the ethanol space? And can there be a case going forward that the government may introduce a reverse auction instead of current style of tenders where prices are prefixed by the government?
See, that is a possibility. I can't deny that as being a possibility sitting today. Yes, the ethanol sector is growing, but as per our forecast, 20% blending would still be hard to achieve in the next 1 or 2 years, because a lot of the investment that was coming in this field has, from new investors, they have shied away after, the FCI rice was stopped. And a lot of, major players in this industry have had to face many issues, shifting from rice to maize, procuring maize, having their plants run on maize. So investment in the sector has slowed down, and that, I believe will benefit a company like us who was ready for the shift. We were forecasting the shift. We were advocating for the shift to maize. And we see ourselves being very strong in this industry regardless of the competition. And also, this maize oil extraction will also benefit us. And I'm very pleased to say, our company has done many forward contracts for grains that will secure us up till May in terms of our maize requirement. And that is being done because we have very good relationship with our suppliers, and they trust us, and that's really helping us as of now.
Got it, sir. And sir, if I can squeeze in just another question, then do we have any plan? Oh, okay, I will join back with you. No issues. Okay.
Thank you. Next question is from the line of Narendra from Robo Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a good set of numbers. Am I audible?
Yes, yes.
So you said that the rate will come into effect this quarter for the maize-based ethanol. So can we expect those 15-16% kinds of margin this quarter?
See, I would not like to put a number on it as of yet, but yes, we expect the margins to increase in the future.
Okay. Got it. And regarding the closure of our oil business, so when can we expect that to happen, and what's the timeline on that, and how much of the business will still remain after everything is done?
See, we have set a timeline of, December of this year to shut down most of our business from our edible oil unit because it falls right in the middle of the city. And there was an increased focus from the government of India. Even our Honorable Prime Minister in the Parliament has recently said that in the next 5 years, they wish to make India self-reliant on edible oils again. So, we don't, seeing how the policies take shape in the next year or so, I don't want to comment whether we completely exit out of this business or not as of yet. But yes, we would be shutting down our unit in the city and moving it to our distillery unit, where a lot of the utilities will be common and a lot of our overhead costs will be decreased to help us be more efficient.
Okay. Got it. And I believe there's another 150 KLPD of CapEx coming. So would you like to throw any light on that as to when that will be completed and what would be the cost and some light on that part?
Yes. Thank you for asking that question. So we are awaiting the environmental clearance for that 150 KLPD, and all the formalities for the same have been done. So we are hoping to, have the same in hand very soon. And once we have that, the capex will be around 150 crores for that 150 KL expansion, and we would begin work soon after, which would take us about 12 months time at least to bring that unit into production.
Okay, and just one clarification regarding that. So that's in Bathinda only, right?
That's in Bathinda, yes.
Yeah, and one last question regarding the biodiesel plant. Say we get a clearance in the next quarter. So how much time will it take to complete that post clearance? And since you said that there's already enough demand, so can we expect like we do in ethanol, that after we finish the capex, we are able to utilize 100% within a short span of time? So would that also be the case with biodiesel?
See, once permissions are in hand, it would take us about 12 months to bring the unit into production. And I'll be a little safe in this sector and not say that we'll reach 100% capacity utilization from day one, because yes, it's a new industry for the company. Raw material, as per our forecast, shouldn't be a problem, but it's an ever-changing cycle, and we have 40% of raw material in-house. So the rest we still need to approach the market for. So I'll be a little safe and not assure that we'll go up to 100% capacity utilization right as we commence production. But yes, of course, that is the target for the company.
Okay, got it. And just one last question. So is that the 82 rupees price that you said? So is that also fixed by the government, like it is in ethanol?
Correct.
Got it. Thank you, and all the best for this.
Thank you. Next question is from the line of Sanika from Sapphire Capital. Please go ahead.
Hello. Hi, sir. Can you hear me?
Yes. Thank you.
Yeah. So I just wanted to know what is the revenue contributions and margins from Swaksha plant for Q3, and also the revenue split for ENA and ethanol for this plant and the Sangam plant.
For the revenue from the Swaksha distillery, it was close to 150 crores for the quarter, with an EBITDA margin of around 11.10%. For the division of between ENA and ethanol, I'm sorry, I don't have the figures for you as of now. Priya, who's on the line from our IR team, will note this down and she will get back to you with an answer. And I believe this should also be in our investor presentation.
Okay. And if you can also provide me with a working capital breakdown for Bathinda and Swaksha distillery.
The working capital for Swaksha is around 45 crores, and the working capital for the Bathinda edible oil and distillery is around 200 crores.
200 crores.
Yes.
Okay. And just one last question. What is the current status for inventory in the real estate business?
See, most of the inventory is sold as I speak. Whatever is left is, some plots and I'd say 4 apartments that are left. And they'll sell at their own pace, because by the end, you have these plots and apartments left that are, they're not north-facing or not as per Vastu, a perfect condition. So we expect them to sell slowly in the coming quarter.
Okay. Thank you, sir.
Thank you. Next question is from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello. Am I audible, sir?
Yes.
Thanks for the opportunity. Sir, could you provide some key data points, such as net debt as of 9 months and working capital requirements for 9 months FY24?
I'm sorry, can you repeat the question, please?
Could you please provide some key data points such as net debt level as on 9 months FY24 and working capital requirements for 9 months 24?
Working capital, I had just mentioned, about 200 crores at Bathinda, both edible oil and distillery, and about 45 crores at Swaksha Distillery. And for the debt, the long-term debt, there is a 120 crore loan on the new expansion at Bathinda, and there is a 50 crore loan at Swaksha for the trial unit and another 70 crores for the new expansion. And I'd like to clarify here that the 120 crores at Bathinda Distillery and the 70 crores at Swaksha expansion, they both fall under the interest subvention scheme, where the applicable interest rate is currently around 4.5%.
Okay, got it. And sir, what was the fuel and power cost for this quarter?
I unfortunately wouldn't have the exact number for you as of now, but Priya can provide you with the exact numbers very shortly.
Okay. And sir, other question was, is there any consideration for entering the IMFL business in future?
We're not actively working towards it as of now. We'll await the new excise policy that Punjab launches and then make a decision.
Got it. And sir, who are the major customers for our ENA business?
So ENA, we have a very good relationship with Pernod. ABD is also a significant buyer. Then, we have local bottlers. We also have Amrut, that's a good buyer, and Mohan Meakin. So bottlers, I think from wide range of bottlers.
Mm-hmm. And any if you have any realization per liter numbers for ENA and ethanol, and any, if you see any changes or in future?
Yeah, for last quarter it was quite volatile because the raw material prices were increasing. So I wouldn't be able to give you an exact number, I think. But in the coming quarter we expect our margins to improve with the raw material coming in from Bihar and also increase in ethanol prices, and so that should improve in the future.
Okay, so just one last question if I can ask. So we procure our maize from, one is Punjab and the other one you're trying to say is we'll procure from Bihar. There are two states that we procure in from.
No, maize is being procured throughout India. Wherever there is availability, we have a very, very wide network of dealers, brokers, and our team also. We have 4 or 5 people who are on tour most of the time. So maize has been procured from MP, from Rajasthan, from UP, from Punjab, from Bihar, from Jharkhand. So wherever there is maize, we're there.
And if you have any realization, what is the procurement price that we paid for this quarter, as the margins have been, we have got a hit on the margins?
So for the last quarter, I'd say an average procurement price would be 24 rupees 30 paisa.
So earlier it was around 21, 22 rupees, if I'm not wrong.
Yes, correct.
So we expect these numbers to get back in the real levels?
Yes.
All right, got it. I'll get back into the queue. Thank you so much, sir.
Thank you. Next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Am I audible?
Yes, sir.
Yes.
Kushalji, congratulations on a fantastic set of numbers, and it really reinstates the confidence of small investors in your company. A couple of questions from my side. Do you think that in the election season there will be a huge demand for country liquor? Do we anticipate it, and are we looking at supply to other states also?
Thank you, Dipesh. No, we stick to working in Punjab, and demand has been good throughout. Actually, so we expect steady increase, not a significant increase with elections.
Okay. And if you can bifurcate, sorry.
But just not to interrupt, but due to the elections, we saw that there was a huge increase of ENA from the Rajasthan state government. And, the companies won a tender of around 35 lakh liters at a very good price of ENA. So that should give us very good realizations of close to, 73 rupees a liter moving forward.
So we won an ENA order for 73, right? That's
Yes.
Fantastic. Fine. So during the election season, we would, concentrate more on ENA. Is that what is going forward?
I think it should, our production will stay intact of what it was before.
Okay. So how much of our Bathinda is ENA and how much is ethanol?
So Bathinda currently, I'd say out of 400, 110 KL is ENA.
Okay. And we won't be increasing just for this election season?
No, because, this was an old plant, the 200 KLPD. So this will require, significant changes to the plant so that we can produce very good quality of 200 KLPD. As I had mentioned, an order of machinery was placed for the same and the machinery is with us. But it requires a 2 to 3 month shutdown for us to make those changes. And with the current demand of ENA and ethanol, we're just, delaying that shutdown for as long as possible. So we need to, upgrade our machinery to be able to produce very good quality of 200 KLPD ENA, which the market requires now.
Right. But the demand is there.
Demand is good.
Okay. And a question on what do you think is the likelihood that the government will be resuming FCI rice supply in the next 1 or 2 years, maybe after elections? And how do you see that impacting maize-based to rice-based?
I am not the right person to answer that question. Any prediction I make is worthless because, the decision is not in my hand and I don't have a proper information to guide you. But I would like to clarify that our company was advocating that maize is the primary raw material for ethanol production and we were ready for it. And now, see what has happened now is with the current price of ethanol from maize, it is viable for a company to procure maize on MSP and produce ethanol from the same. So this is beneficial for the farmer, for the government, that they don't have to, get involved in the procurement process of grain. The farmer is getting MSP, the industry has requirement for it, and the government does not need to get involved in it. So this is a very long-term policy, in our opinion, and we are focused towards this.
Okay. And we do not see any issues with the farmers' protest for a higher MSP?
No, that is not linked to, I think that is more to do with paddy and wheat, the farmers' protest, and not with maize. See, if a farmer is to get, so the current maize price is 20 rupees 90 paisa, the MSP price. And if a farmer in India gets a yield about 250 quintals to 300 quintals per acre, the global standard is above 400. And in wheat and paddy, India has reached the global standard. So the maize, since it was not a very popular crop, India has yet to innovate and reach the global standard. But even with the current yields, the farmer makes about 25 to 30% more per acre as opposed to paddy if they were to get an MSP for maize. The problem was earlier they were not getting the MSP for maize. So they weren't, the cultivation of maize wasn't going up. But now with the farmer getting the MSP for maize, their realization per acre has increased. And we believe that the Indian farmer and our research institutes and our agricultural institutes will now work towards bringing India to the global standard in maize yield, and that is the next target. So this will overall increase the farmer's income. This is a very good crop for the farmer as well.
Okay, great. And just one last question: our 100 KL biodiesel project, which we are planning to do, that will be in Bathinda, and what will be the cost of production of biodiesel? Will it be same as ethanol? So, I just want to know whether there will be an incremental 10 rupees which will be coming to our books.
See, that will be at Bathinda. See, cost of production, we expect the processing cost to be around 15 to 16 rupees a liter for biodiesel, and the rest will be in raw material cost. But as I mentioned, 40% of the raw material is freely available to us. So we expect very good margins from this business.
And the power advantage which you are getting from our the Parali which we buy, that will be the same, right? Even for biodiesel?
That will be the same. And for this biodiesel and 150 KLPD expansion, in our environmental clearance, we've already sought for an approval to add another paddy straw-based power plant.
Great. Just one more question from my side, if you allow me. The debt which we are planning to take for this biodiesel and for the 150 KLPD, are they also in the interest subvention scheme? And if what is the interest?
No, they won't be in the interest subvention scheme.
Sorry, I couldn't get that.
Hello? They will not fall under the interest subvention scheme.
Okay, fine. Yeah, I'll fall back in for the more questions. Thank you. And all the very best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question of the day. On behalf of InCred Equities, that concludes the conference of BCL Industries. Thank you for joining us, and you may now disconnect your lines.